Hello everyone. Education is the moment from darkness to light. Through the education, we can create wonders in the world. With the education lamp, we invent so many things on the world, in the world. I would like to welcome my dear students for a greatest learning platform by the digital learning initiative taken by the government of Karnataka Department of Collegiate Education. Myself, Narsimamurthy TN, an assistant professor and an in-charge principal, Government First Aid College, Midigeshi, Madhugiri Taluk, Tumkur district. In my previous videos, I share the knowledge of so many concepts of income tax. Today, I am going to explain a new topic, that is capital and revenue concepts in income tax. Okay, let us will begin the class. So, meaning and classification of capital and revenue. So, all of us know the capital and revenue in general sense, but in the income tax sense, we must go in detail. So, here tax is levied on the income of an assessee and not on every receipts which assessee receives. Here, the method of charging tax on different types of receipts is different. Income Tax Act 1961 provides a separate head, capital gains, for levying tax on capital receipts. So that whatever the receipts or losses or expenditures from the capital is calculated separated from the capital gains. And income tax is levied on the net income, net taxable income of an assessee. Only on revenue expenses are allowed to be deducted from the revenue receipts. Only revenue items. Revenue expenses are deducted from the revenue receipts. Particularly while calculating the business profit and gains from business and professions, only revenue receipts and revenue expenses are to be considered. This makes the distinction between capital and revenue plays very important role. So for this distinction, capital and revenue items can be divided into three subparts, that is capital receipts, revenue receipts, capital expenditures, revenue expenditures, and capital loss and revenue loss. Okay, students, we'll discuss in detail the capital receipts and revenue receipts. Before that, we come to one conclusion, that one fine meaning for the capital and revenue. So that conclusion is capital is the value of receipts or expenditures or losses occurred or recurred once in a nature, once in a time. Any capital receipt or expenditure or loss occurred only once in a time or once in a nature. One time it happens. On the other hand, revenue is the value of receipt, expenditure, and losses recurring more frequently in nature. It happens again and again. Again and again is going to be happen in a revenue nature. So then we'll discuss in detail the capital receipts. Capital receipts. Here, the capital receipt is a receipt which is not received regularly. A receipt which is non-recurring in nature or received once in a nature, once in a time. For example, profit or gain on sale of assets. On the other hand, revenue receipt. Revenue receipt is also a receipt which is received regularly or more frequently, or the income received regularly, recurring receipt is treated as revenue receipt. So, for example, cash received on sale of goods, interest received, etc. So then we come to understand the next topic, capital expenditure. Capital expenditure is the money spent on acquisition or creation of assets. It refers a money spent. Once in a money we are going to be spent for the acquisition or creation of assets. Any expenditure whose benefit is not exhausted in just 1 year, but it is available for more than 1 year. Any expenditure is spent for the benefit is not exhausted within 1 year. Such expenditure is treated as capital expenditure. Any expenditure which results in acquisition of any fixed assets or adds to revenue earning capacity of an asset in connection with the installation of fixed assets is called capital expenditure. Any expenditure for the purpose of installing or any for the acquisition of any fixed assets or increase the earning capacity of capital asset is treated as capital expenditure. For example, purchase of land, building, plant, machinery, equipments, etc. is treated as capital expenditure. On the other hand, the revenue expenditure. Revenue expenditure is expenditure for the operational expenditure of business, which spends more frequently or regularly. An expenditure incurred for the day-to-day running of the business for maintaining the fixed assets. Any expenditure spent for the day-to-day activities of business or operational expenditures of the business. It may be regularly company is going to spend. Hence, at the such type of expenditure we call it as a revenue expenditure. Expenditure whose benefit got exhausted within 1 year. Expenditure incurred for maintaining and not for increasing the revenue earning capacity. Any expenditure whose benefit got exhausted within 1 year. Such expenditure is treated as revenue expenditure. In the same time, expenditure incurred for maintaining of equipments, plant, machinery is also a revenue expenditure. But the expenditure for revenue earning capacity is not a revenue expenditure. And the next topic is capital loss. Capital loss is the loss related to capital assets of the business. Capital assets any loss occurred from the capital assets is treated as capital loss, which is not occurred regularly. A loss which is non-recurring in nature or occurred once in a nature, we call it as a capital loss. For example, destruction of plant, building collapse, etc. Next, with the revenue loss. It refers the loss sustained by the sale of goods of the business or by destruction of stock in trade of the business. Revenue loss is a loss, any loss sustained by the sale of goods, or it must be repeated again and again. Such loss is treated as revenue loss. Any loss occurred or happened regularly with more frequently is treated as revenue loss. For example, goods destroyed, goods theft, etc. So then, after a discussion of these things, we are going to be discuss the differences between capital and revenue receipts. Capital and revenue receipts. So there are fundamentally differences between the revenue and capital and revenue receipts. So here, capital receipt, it means it is a sale proceeds of fixed assets. Any sale proceeds from the fixed assets is treated as capital asset, capital receipt. On the other hand, revenue receipt, any sale proceeds of trading assets, sale proceeds of trading assets is treated as revenue receipt. Next, any receipt in substitution of source of income is capital receipt. Any receipt in substitution of source of income is capital receipt. On the other hand, revenue receipt is any receipt in substitution of income is a revenue receipt. Any receipt or any income in the substitution of revenue receipt is a revenue receipt. So we come to the next difference is compensation received for loss of business is a capital receipt. Compensation received for loss of business is a capital receipt. Any compensation received for loss of business, such type of receipt is treated as, such compensation is treated as capital receipt. On the other hand, compensation received for the loss of profit is revenue receipt. Compensation received for the loss of revenue profit, revenue receipt ಅಂತ ಹೇಳಿ ನಾವು ಅದನ್ನು ಕರಿತೀವಿ. ನೆಕ್ಸ್ಟ್, subsidies or grants received from the government for any development scheme is capital receipt. Any subsidies, grants received from the government for any development scheme is a capital receipt. Subsidies or grants given by the government is usually once in a time or occurred once in a time. So such income is treated as capital receipt. On the other hand, in the revenue receipt, any subsidies or grants received from government for meeting foreign competition is a revenue receipt. Revenue receipt helps to business by providing subsidies, grants to meeting foreign competition or trade with abroad countries. So is called as revenue receipt. The last difference in a capital receipt is insurance received from the capital assets. Insurance money received for loss of capital asset is a capital receipt. On the other hand, insurance money received for the loss of trading asset is a revenue receipt. So then we'll understand the next differences is a capital expenditure and revenue expenditure. Any expenditure In capital expenditure, any expenditure which increases the earning capacity of asset, any earning capacity of asset, we call it as a capital expenditure. On the other hand, any expenditure, an expenditure incurred for maintaining a fixed asset, maintaining a fixed assets is called as a revenue expenditure. The other difference is cost of acquisition on installation of fixed asset of a fixed asset is capital expenditure. On the other hand, purchase price of goods bought for resale and purchase expenses is called as a revenue expenditure. And the next difference is an expenditure incurred for the acquisition of source of income. Acquisition of source of income is happen once in a nature. So such expenditure is treated as capital expenditure. On the other hand, in revenue, any expenditure incurred for the purpose of earning of an income. Earning of an income is a day-to-day activities. Every business primary motto is to earning the income. So, any expenditure incurred to earn the income is treated as revenue expenditure. Next and the last difference in a capital expenditure is an expenditure incurred in obtaining capital by issuing shares. By issuing shares. Any expenditure incurred obtaining capital by issuing shares. Shares issue happens once in its business. If any registered company, they can issue at the first time is shares. One shares, the additional shares also going to be issued in the next time. At every stage of issue is treated as capital expenditure. Such expenditure for incurred for the issuing of shares is treated as capital expenditure. On the other hand, an expenditure incurred for raising loans and issuing debentures is revenue expenditure. At the time of any finance are required by the business, that business is going to be raise a finance, raising a loans or issuing further debentures. So such expenditure is treated as revenue expenditure. And the last differences between capital loss and revenue loss. In a capital loss, it is capital loss is not arise in the course of regular business. Capital loss cannot arise in the regular course of business. On the other hand, revenue loss arise in the course of regular business. Revenue loss is arise in the course of regular business. The next difference in capital loss is a loss on sale of capital asset. Loss on sale of capital asset is treated as capital loss. On the other hand, in revenue, loss on sale of trading asset. Trading asset, after selling of the trading asset, if any loss is occurred, treated as revenue loss. In capital loss sustained by a person for being a surety to another person is treated as capital loss. If anybody is giving surety, the borrower can become insolvent. The surety is responsible to pay his debt. Hence, the surety, any loss on account of surety is treated as capital loss. On the other hand, in revenue loss suffered by a business on account of embezzlement by the employees. Embezzlement can be done by the employees. Under such embezzlement treated as revenue loss. The last difference in the capital loss is a loss due to withdrawal of money from bank. Loss due to withdrawal of money from bank is treated as capital loss. On the other hand, loss due to embezzlement is treated as revenue loss. So, this is a small presentation of capital and revenue. Capital and revenue. So, thank you for your patience for watching. So, keep watching, keep continuing that, and like it and share it. Thank you. Thank you once again. Thank you.